welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today, a show where we'll help you understand the trade setup and the market strategies of the day. Let's start off with a recap of the markets yesterday, where the markets did slip for the third consecutive session. Nifty slipped about 350 points from the day's high level. Remember, we had at one point in time also hit above 25,800 mark, but we eventually slipped below 25,600 as well. Nifty Bank, despite hitting a record high of 56,161, also ended up 300 points up from the day's high level as well. Now, the realty index was the top moving sector with bucking the trend, over 1% gains coming in. Hopes of RBI rate cut probably announcing on Friday is something that's edging these stocks up. But at the same time, oil and gas was the top losing sectoral index. Now, as far as today's cues are concerned, a whole host will depend on what the global cues are shaping up and, the kind of information statements coming in from Donald Trump as far as the tariffs are concerned. Now, remember, Donald Trump has signed an order hiking the steel and aluminum tariffs to 50%. That was to be seen starting June 4th, and that will be a reality. Wall Street Journal has noted that China is prepared to play hardball with the United States, so we'll see how that happens. Howard Lutnick has already pointed out that he's very optimistic with a trade deal coming soon with India. That's something that he is looking at this point in time. But at the same time, he has indicated that India, they believe, has rubbed US in the wrong way by constantly taking arms ammunition from Russia is something that he has also mentioned. Now, remember, Elon Musk has also blasted Trump's tax bill as spendthrift, abomination of the the kind of bill, criticism that's coming in from Elon Musk as well. Now, following all of this, we've also seen the S&P 500 overnight up by about 0.5%, NASDAQ rising by 0.8%, and Dow Jones averaging about 0.5% of gains. Amidst all of this, talk about tensions on tariffs and on the new tax bills that are coming in. Now, as far as the Asian markets this morning are concerned, we did see that they opened higher following another key data that was seen in the US that indicated resilience in the US labor market despite the ongoing concerns over the tariff policies. So South Korea's Kospi led the gains with 1.6% rise. That was buoyed by the election of a new president as well there, which brought an end to 6 months of political uncertainty. US equity futures are also witnessing an uptick, so that could also lend some support to the sentiments in trade today back home. We have actually seen across the board, China, Hang Seng, Nikkei, Kospi also up and about in trade, and the Gift Nifty is also indicating to a positive start. Let's see how that takes shape. As far as the foreign portfolio investors are concerned, they remained net sellers for the Indian equity markets. Third straight session, selling stocks worth up to 2,853 odd crores. Domestic institutional investors, however, stayed net buyers for the 11th straight session. They bought equities worth about 5,908 odd crore rupees. So that's something that as a setup that you need to know. We'll be waiting by to welcome our guest with us. We have Mr. Gaurang Shah, Senior VP of Geojit Investments, now joining in on the program to share with us his views on the markets. Warm welcome. Good morning to you, Gaurangji. First up, I want to understand, completely away from the markets, were you glued onto the match as far as IPL is concerned, and were you rooting for the winning team?
Well, thank you so much, Sakshi, for having me on the show, and good morning to all of you. Also, yesterday, before the match started, the finale of the IPL, I was telling my wife that both teams deserve to win, and may the best strategy and, of course, the team that holds out win. It was a little bit disturbing to see the Punjab King 11 lose out. I think Shreyas equally deserved to win as much as Kohli. But Kohli deserved to win a little bit more because, this was his 18th and the last, I believe, IPL, if I'm not mistaken. And this was the last feather that was missing out in his hat. So I think he just done it. And his emotions tell the entire story of 18 years of wait, Sakshi. I'm not denying any credibility to Kings 11 Punjab. But I think finally RCB and, of course, Kohli did the magic, and that was the best team that stood out yesterday.
Absolutely. So The finale couldn't have been better. Both the best teams striking for the first time in the finale. And of course, it could have been anyone, just like how you pointed out. But probably Kohli deserved a tad bit more. And that's why the fans have been galore. Bangalore was up the whole night. We've been seeing visuals of there. And of course, the cup will be arriving in the city today. So that will be another visual to be seen in today's trading session, apart from what we see in the markets. Coming back to the markets now, Gaurang, we'll start off with, again, the global perspective. Again, the Trump policies on steel, aluminium surging. So the uncertainty continues, nevertheless. Now, we do not know whether the taco strategy that's being talked about so much over the last 1 week on, Trump always chickens out. So probably he announces one day and goes back the second day. Again, on steel and aluminium, he signed the order. How would you really look at the fresh uncertainties again with China looking to play hardball? What could that lead to?
If I believe, I hope you and your viewers and your channel will not mind me saying this. हिंदी में एक कहावत है ना, बिन पेंदी का लोटा. you know I mean, if you are a president of a developed economy, you can't be behaving like a joker of an Apollo circus. You doing this flip-flop. I mean, what does it tell the rest of the world? And I'm amused there are people clapping for whatever he says. It's really sad. We'll have to bear this pain. We've spoken this since the time he announced this tariff on 2nd of April. And I believe 6th of July is the last day, the so-called window of 90-day, breather 90-day that he has given. And he's been rubbing leaders of respectable country in the wrong way. And now another joker called Elon Musk has also spoken against him. I never had high regards for him, with all due respect to him, of course. But जब चंगू मंगू मिल जाते ना, तो फिर what happens to the reality. So I think we'll have to bear this pain of so-called Mr. Trump and his tantrums regarding the tariffs till 6th of July. I hope that is the last date, to be very honest. I wouldn't be surprised, Sakshi, if there is an extension of that window also, because he's not been able to get what he's been speaking about. And then suddenly he wants to become the messiah of the world in form of, striking peace with countries which were at loggerheads. For example, the credit that he took for the unwanted credit, rather, that he took for India, Bharat and Pakistan unpleasant situation. I think he should do the same. No, I mean, if he's saying that he's used trade as a bait, then use that trade as a bait between Ukraine and Russia. Why are they not settling? I mean, you should, introspect a little bit. But I have discounted it, Sakshi. I think we'll feel the pain for maybe a day or two for whatever he says or whatever he unders, but then we'll get back to business.
We'll get back to business. So that's as far as what's happening in the US. Back home, again, something that I did point out with you and discussed with you is the block deals that started off in May. In fact, May has already registered close to 60,000 odd crore rupees of promoter stake sale. That's been the highest since August of 2024, when we had seen another 75,000 odd crore rupees of promoter stake sale. Again, in today's trading session, there's an expectation of almost 3,500 crore rupees of stake sale coming through for Indegene, Tata Technologies, Aditya Birla Fashion Retail, Alchem. Alchem is where the promoter could be selling. Indegene is where Carlyle could be selling as well. Tata Tech, we are given to understand that TPG could be selling from 6% of their stake. They have been consistently paring it down. And after today's stake sale, probably they would have completely exited. And for ABFRL, it could be Flipkart that could be selling yet again. Just help our viewers really understand. For a lot of companies, a cleanup trade is also happening, leave alone a large block deal or a trade where the promoters or early investors, P investors, are completely exiting. Is this a thing to worry at all?
Sakshi, this is not the first time that it is happening. It has happened in the history, and I'll give you one more example. There is this fantastic low-cost airline carrier, Interglobe Aviation, Indigo.
Yes.
Gangwal family has sold more than 5 or 6 times their stake. Very recently, I think it was about 10 days back, week or 10 days back. See, why are we looking at only one side of it, Sakshi? Why are we looking at it as a promoter is selling out a large stake? And alarm bells go on ringing. Why aren't we looking at the flip side that if some large promoter is selling out a large stake, then that stake is getting bought out in the first 30 seconds or first 1 minute of the market opening for such block stroke bulk deals. Maybe a single investor buys it or maybe a couple of investors. That's immaterial. But the fact is that has been bought. So rather than looking at a glass half empty, I think we should look at it as glass half full. And nothing changes, Sakshi, according to me. And if my understanding stands to be corrected, then somebody needs to correct that understanding of mine. Fundamentally, the company works as normal. It's business as usual. A promoter or a large investor change in terms of your stance. If you got invested in a sound stock, fundamentally sound stocks, growth oriented, you should not get worried about such deals happening.
To not get worried about such deals. It will be business as usual. Fundamentals also stay intact for such companies. So no need to worry in case you're invested in such companies in your portfolio. These are the things that happen. And of course, we will be getting to understand, if even if there is a reduction in promoter stake, who are the key buyers? Are there any fresh investors that are coming in? Pre-open trade. The first pre-open take was in fact below 24,200. It's improved for the better as far as the Nifty is concerned, but still lower. We are around 24,468 right now, 50 points lower. That's still a sensible number to look at. 0.2% of a decline for the Nifty 50 is what we are given to see right in the pre-open trade. As far as the rupee dollar equation is concerned, the rupee has opened at 85.59. It's a weakness of about 15 paisa against the dollar that we are seeing at this point in time as well. Now, of course, we will be looking to see a whole host of stocks that will be in focus today. We'll start off with the banking names, HDFC Bank. That's also in news today because the capital markets regulator, SEBI, has given a green light to, its subsidiary, HDB Financial Services, to launch an IPO. Now, this will be the first HDFC group-led IPO that will be coming in 7 years. It will be to the tune of 12,500 odd crore rupees, as we are given to understand, with 10,000 odd crore rupees of offer for sale, and probably the largest IPO in the recent times that we've seen in the NBFC space here. We'll start by talking about it. HDFC Bank indicating an opening percent lower in trade amidst this IPO news. Gaurangji, how would you look at HDFC Bank with this new IPO announcement? We've seen in the recent past when Bajaj Housing Finance came out from the Bajaj Group in the NBFC space. Now it's HDFC Bank for launching its NBFC in the listed world.
So, I think the entire sector looks quite interesting, especially in a times when we are in the rate cut scenario, Sakshi. And housing finance companies were one of the first beneficiaries of rate cut, and that simply because you get rate cuts, people get excited to buy a house because their EMIs are low. More importantly, I think affordability has also gone up. Asset quality in housing finance companies is relatively better than small microfinance companies. To answer your question on HDFC Bank, well, we've been positive for a very long time. We continue to maintain our positive stance. And of course, 6th of June is just day after when we meet for the credit policy. And expectation of 25 basis rate cut is what is on the cards. Some are talking about 50 basis point cut, but our view is that we should get at least 25 basis rate cut, which again will augur extremely well for the banking and finance. I don't have any insight about the valuation of this IPO and the approval that they have got, but we'll possibly speak in the near future once we have clarity on that.
Sure. Since we were talking about the housing finance and of course the housing industry looking at the rate cuts, day after is when we will get to see RBI's policy announcement. So just wanted to get your sense as to, would you expect a third time around a rate cut happening? What exactly is the quantum that you're looking at, and how is that likely to aid the sentiments which have been so far directionless on the D Street over the last 1 week, 10 days?
I mean, the street is pretty confident that we will get a 25 basis rate cut on Friday, 6th of June. Some are expecting 50 basis point. Let us see what happens, and we leave it to the wisdom of the Monetary Policy Committee members and what they guide the RBI governor to do. Whatever data points, Sakshi, we've had very recently, whether it is inflation, whether it is the GDP number, which was a screamer according to me. I mean, it was just like yesterday's win and Kohli's reaction. The GDP number expectation was 6.80 or 6.84, and we came at
Yes.
7.40.
Yes.
That is a good number. I hope we stay there, at least better from here on. So, giving the backdrop of events and, of course, the local data points, global headwinds, my sense is that at least a 25 basis point cut is definitely there on the cards. And this is not a full stop. I think in the next couple of credit policies, we are again going to see rate cuts coming through. How much will be the quantum? Well, that will totally depend upon what the data points in terms of macro tell us on the domestic front.
Okay, so a 25 basis points of a rate cut is something that you could expect. Markets are penciling in that and working with that from the RBI policy on 6th of June. That's something that we could look at. Let's stay with the banking space though and understand a little bit more. I'll talk about one more specific stock, sir, and then you could probably give us an overview on the banking space. Yes Bank is something that I wanted to discuss. Its board has again given a green light to raise about 7,500 crores via equity, 8,500 crores via debt instruments in the fiscal year 2026. There has been constant news report of stake purchase happening that lifted the stock. But again, there have been, volatile trades that we've been seeing here. Those that have been only looking at Yes Bank from a story of a turnaround point and maybe wanting to catch that bottom, how should you advise them, sir?
Wait for the numbers to tell you that story, Sakshi. That is what I will tell everybody. See, there is a lot that is happening. Well, SBI sold its stake to Sumitomo, if I'm not mistaken. Correct me if I'm wrong, Sakshi. Will that make the numbers change in a quarter? No, according to my understanding. It is just a holding moving from one to another. How changes are going to come in and how is it is going to make the earnings turn around, improve the numbers, improve the gross and net NPAs, bring down the provisioning, get confidence from retail investors to put their money in form of FD so that your CASA ratio is something that you can speak about. And finally, after all that is done and dusted, earnings will tell you the story. Again, we don't have coverage on Yes Bank, so I won't give any specific comments on buy, sell, and hold. But I think there are better banks to look at. Well, if you like Yes Bank, then why don't you look at IDFC First Bank as a disclosure where we have a coverage, and the position compared to Yes Bank is much better in IDFC First Bank. So living on a hope without concrete fundamentals or numbers visibility, I think you are possibly living in like Alice in Wonderland.
Okay, got that. So wait for the numbers to really tell you the correct story and only then look at this maybe as a potential opportunity. Don't jump the gun just right yet till the time there is enough and more clarity so that your money is safe when you invest in such stories as well. Overall, on the banking space, are you still positive with the large cap private sector banks, which we have discussed enough number of times? ICICI, HDFC, you did talk about already. Axis, Kotak. Are you looking to add even PSU banks at this stage, which are just starting to again pull back from their consolidative levels?
So, Sakshi, I think now the view is that you should have a mix of best of the three world. Okay. Now, what do I mean by best of the three worlds? So, you have private sector banks, you have public sector banks, and you have strong NBFCs. Not to forget, NBFCs have done phenomenally well in terms of numbers and, of course, the kind of growth that lies ahead. So, I would say that when you talk about finance, or BFSI segment, don't just restrict yourself to the private banks. Look at public sector banks also, and along with that, look at strong diversified NBFCs, because they will also be the eventual beneficiaries of the rate cut process that is happening.
Okay, got that. Let's shift focus from apart from banking space. Autos is something that I wanted to focus on, especially again, Ola Electric, which we have also discussed it in the past. Again, what we are given to understand is that the brokerage houses have been consistently reducing their targets of late after the earnings came through. Now there are block deals happening. We are given to understand Hyundai Motor and Kia have fully divested their stake in Ola Electric Mobility via block deals, and that would also lead to some kind of a pressure today. What is the Ola Electric story really telling you? It's now slipped below 50 odd levels. It's been a disappointment right from the time the listing happened, and after that, so many news flows that came in on the negative territory as well.
And that negative news flow doesn't seem to be stopping anywhere in the near future, Sakshi.
Yeah.
I'm sorry to say that. We discussed it pre-IPO. We discussed it, I think, post-listing. We don't have any specific coverage on Ola, though we had come out with an IPO note when the IPO had hit the street, and then we know the story. I think 76 was the floor. It went up to 150, and now it is discounted somewhere sub 50 rupees. See, the problem with Ola Electric is, first of all, I was very, very vocal enough, even before the IPO, despite the fact that we had an IPO note, that please be aware that there is a loss during the IPO time. There was a loss, again, if my memory serves me right, 1,500 crores, which has got ballooned to a higher level. The product does not seem to go well or augur well with the customers as far as post delivery services is concerned. Number of complaints are there with the consumer court. The company was also pulled up by the regulator for giving certain statements which were not absolutely in line with what the reality was. Competition is increasing across companies as far as EVs are concerned. And I think the established players who were there before Ola came into the market with the IPO, like so Bajaj Auto, TVS Motors, Hero Motocorp, all these will continue to give a very strong competition to Ola Electric. So need to be careful. I think there are better names. Like you said, for Yes Bank, there are better names. I said like for Yes Bank, there are better names. Similarly, for Ola Electric also, there are better names.
There are better names in the EV two-wheeler space when compared with Ola Electric. So look at those opportunities. Let's try and welcome another guest on board. We have Kiran Jani joining in, Head of Technical Research at Genam Broking, who's now going to be joining in a minute to help us understand the technicals. Warm welcome. Good morning to you, Kiran. 2 minutes to go. Help us understand your strategy on the markets, Nifty Bank today.
Very good morning, everyone. So overall, if you look at the daily chart price of Nifty and Bank Nifty, both are trading inversely. Whereas the Nifty is trading little bit cautious at current market level, because 24,500, 24,300 is a cluster resistance. If that level is broken down, then we can expect further corrections also. But looking at this weekly expiry open interest, we are expecting some bounce from 24,500 to 24,400. Any dips towards that particular level can go long. Even at current market price, one can go long. Keep a strict stop loss below 24,300 as a positional stop loss. And looking at price pattern, we can expect post RBI 25,000, 25,200. So we are still hopeful considering the daily price chart. Coming to the Bank Nifty has a very good black pattern breakout. We have seen 55,500 was the cluster resistance. Last Friday, there was a weekly close, and it has closed above 55,500. So it's a clear-cut breakout. But yesterday's candle is little bit negative. So definitely today's opening, we have to look around somewhere. And if prices continue sustaining above 55,500, then definitely we can expect today to market to cross 56,000. So any dips toward 55,500, 400, it's a opportunity to go long. Keep a strict stop loss of 55,200.
Okay, fair point. We'll also take two quick stocks from you, Kiran, before the markets open.
So two stocks which we are liking is one from the FMCG and another from the auto. So from auto we like Tata Motor trading somewhere around 700 at current market price. One can go long. Keep a strict stop loss of 690, which is the 100 days moving average, and we are expecting price target of 740 in upcoming time. So it's not only for the intraday, but little bit positional call. Go long at current market price with a stop loss of 690. One more call from the FMCG that we like ITC. If you look at the ITC price after the dividend adjusted, 418, 417 is the current market price. Very good setup. You can keep a strict stop loss below 410, and we are expecting price target of 440 in upcoming time. So ITC and Tata.
Okay, got that. The markets have opened. It's a green start for the markets. The Nifty Bank starting on the positive zone. Even the broader market starting in the positive at this point in time. Look at the Nifty; it's at 24,592. And even the Nifty Bank is now serving at 55,741. If you look at the current levels, NFC advances are 1220 to declines of 422. When we look at even the broader markets, both mid caps as well as the small caps are opening with about 2/10 and 3/10% higher take at this point. So it's a broad-based move on the positive side that we see as far as the Nifty is concerned. Large number of stocks on the Nifty still on the positive side. IndusInd Bank, Eternal, Bharti Airtel, SBI, Maruti, these remain as the top movers, whereas TCS, HDFC Life, Sun Pharma, Trent are opening on a lower end at this point. Block deals now taking place, 6.2% equity exchanged on AB Fashion, 7% lower is what we are seeing as the first tick on the lower end as far as the block deal impact is concerned. Sun Pharma and Spark both are lower in trade. Remember, there's been a drug which was under clinical trials for psoriasis, and in two clinical trials, they have not received, probably the kind of results the companies were expecting, and now they are given to stop the further developmental studies on that, molecule that the company was studying. So both Sun Pharma and Spark are reacting negatively to it. Indegene also lower by 4.5% again. Block deal impact can be seen on this one. We are given to understand that here as well. There is almost, for Alchem Labs, we have a 1.4 equity exchange hands. Indegene will just come in a moment for all of you to really see. AB Fashion, we are seeing 6.2% equity exchange of hands. But let's also look at the stocks that are in fact on the positive zone. We have Swiggy also. Eternal opened higher. It was among the top movers. Swiggy is also joining for. Cochin Shipyard up by 2.2%. Yesterday also the shipbuilder stocks were in clear focus. That's also up and about. Broking houses spaces, Motilal Oswal is also opening positive. Some of the metal stocks, Lloyd Metals is also opening on the higher trajectory at this point in time. NMDC slightly lower in trade. Remember, there has been changes as far as the iron ore prices are concerned. So that's getting a clear reflection there. Let me just help all our viewers to understand. NMDC has cut the lump ore and fines prices by 150 rupees per ton effective today. It has also cut the lump ore price by 150 rupees per ton to 6,300 rupees per ton now. And it's also cut the fines price to 5,350 rupees per ton now. So keep an eye out on that as well. We have some more details coming in from the AB Fashion equity that's exchanged hands. 6.2% equity will equate to 7.6 crore shares. And we are given to understand this is now further impacting the stock. 8% lower, 8.5% lower. Kiran, to you, how do you see the opening in the markets today?
So market is opening at our expectation only, as we are expecting some of the gap up, and after the gap up it should sustain, but it is just in 4 minutes the market has opened, so we have to wait for some more time. But looking at the broader market, you can see some of the large cap or some of the specific sector specific is helping the market. You look at the FMCG, you look at the IT, which are trying to hold the market. With that, you can also see the PSU banks; they are also doing very good. So there are chances we can see some of the recovery for sure, but yeah, volatility has been there. You look at the bank Nifty after opening, it has given all the gain also. So wait for some more time. 24,500 is definitely a very good support. Any dip toward 24,500, it's a great buy. And considering the tomorrow expiry, we are expecting 24,700, 24,800 level to be touched. So at current market price, you can go along with the strict stop loss below 24,400 on Nifty.
Okay, got that. Getting back to our conversation with Gaurang sir at this point in time, Gaurang ji, we also wanted to get a sense as far as Bharti Airtel, the telecom story is concerned. There is a brokerage house, Macquarie, that's ascribed a 40% uptick to the possible scenario. It's given higher targets to this one as well. How would you really look at the kind of opportunities that exist even after we have seen the stock hitting fresh highs in the recent terms? It gave an outperform rating. 2050 is the new target price from 1800 earlier. There is a 40% profitability growth that they are ascribing it to. What exactly would you look at?
So I think this has been one of the consistent players amongst the large cap universe, Sakshi. And it is also a fact that telecom service sector likes of Reliance Industries because of Geo Mobility business in its balance sheet and Bharti Airtel. These are the companies which are very well insulated from the so-called external tariff tantrums by President Trump. That's point number one. Point number two, you have a consistent increase of subscriber base thanks to the loss of subscriber base of that is Vodafone Idea. Bharti and Jio consistently over the last many months have been gaining subscriber base. Last year there was a tariff increase. We expect before we end this year, December 2025, you will see one more tariff increase and data getting consumed at a higher level. So ARPUs are likely to improve. We have a positive coverage on Bharti Airtel from a long-term point of view from our research department, our research team. And I think there is a lot that can happen to the entire sector.
Okay, got that. And Gaurangji, it's cannot happen that you are with us and we cannot talk about fresh highs, 52-week highs on the defense names today. Again, there's a stupendous rally again on GRSE, almost 7% higher in trade. It's now trading at 3186. Cochin is at 2055 right now. In fact, it touched a high of 2108. Has gone also inching up higher, and we have across the board that the momentum continues. We had talked about Cochin Shipyard. I remember from the pre-split almost to the similar levels. It went back and then it's come back to the same level. So it almost feels like deja vu discussing Cochin with you at the levels that there are at the current levels. How would you look at the fresh moves that we are seeing here? What would it mean for all the investors who've been holding on? Of course, they are cheering, but for those who may still want to enter.
Well, don't. हिंदी में एक कहावत है साक्षी कि सोच अगर गहरी हो जाए तो फैसले कमजोर हो जाते हैं. So stop thinking and start doing. I think that's what I would say. You lost out on the rally, and the sector's strength speaks for itself. You look at the levels where the IPOs were announced of all these companies belonging to defense from Government of India, be it Hindustan Aeronautics, Mazgaon Docks, Garden Reach, Cochin Shipyard, Bharat Dynamics, and the rest of the other some of the prior players. We saw a phenomenal rally. Then we saw a significant 50% retracement, or maybe more, from the all-time highs. And again, some of them have not only recouped the all-time highs, but made a new all-time highs.
Yes.
So what does it tell you? I mean, it tells you the inherent strength of this sector. We are still positive on the defense sector. And I was always maintained that if you if you invest into defense sector, then don't invest it from a 3-6 1-year point of view. Invest into defense if you really want to meaningfully make profits. Take 3 or 5-year plus kind of time horizon, because it takes time to execute the order book because of the high technology precision and a longish execution period.
Absolutely. The index is up by 1%. Gaurangji, would you want to reiterate the Panch Pandavas that you had mentioned about, a year back for all our viewers to really keep an eye out on and keep them in their portfolio?
No. I mean, I'll maintain them because they are the strongest players. The Panch Pandavas that I mentioned, I think it was about a year back or maybe less than that. I don't know, to be very honest. So these are all strong players, Sakshi, and you should continue to look at them from a positive point of view. And I would say that, investment in defense should not be sold out unless you need money.
Correct. Absolutely. So the story goes on strong. Let's also take Kiran's view here. Kiran's spectacular rally unfolds 5,000 and above for HAL, Garden Reach at 33.52, Cochin above 2,100, Mazagon Dock also soaring. Where do you still find technically comfort level to be entering again? Because, a lot of investors would be feeling again dizzying heights that they may be looking at to enter this space, which is already shot up in the last 1 month. So where do you still find comfort?
So there are two stocks where we find comfort, but both again in during this rally runaway. One is the GRSC and BDL. If you can see the chart price where the last to last year defense story unfold and all the stock price are running over. As of now, GRSC, BDL and BEL, these three stocks are only have crossed their previous highs. So it has shown, it is showing the inherent strength in this particular stocks. So those are our favorite stock. Those are we are holding in our family portfolio also. So as a schemer point of view, so both are looking very good. Any dips towards, if you find any correction like last time has happened, this both stock can be looked at around and you can go long. At current market price, we are not giving any kind of sort of buy recommendation because you can see the momentum indicator is an extreme overbought condition. So there will be the chance that you will find some profit booking or some time correction during that level. Definitely one can go long. So those both stocks you have to keep watch on your portfolio.
Okay, got that. Gaurangji, we'll take some more views from you before we have to let you go. After the earnings, which has seen a curtain drawn last week, tell us any stocks that you've added to clients' portfolios after Q4, sir?
This will need me to scratch my gray cells. Uh, if you will, we have increased our targets on
Okay.
on a company which is related to defense. I don't know why we are, deja vu. This is a deja vu, as you rightly
Yes.
mentioned. So Bharat Electronics is something that we have revised our targets upwards to 441.
Okay.
That's very recently. One new addition that we have done is form of Sundaram Fasteners. Again, this is a short to medium term call. KEC International, again, mid cap, small cap, mid cap, cap goods engineering stock. Revised targets somewhere close to about 1,000 rupees. These are some of the initial post Q4 numbers that our research team has come out with the revised targets.
Okay, wonderful. Well, we'll thank you, Gaurangji, for being with us on the show and helping us navigate through such a wide variety of stocks and sectors, global, local views. Always a pleasure to host you. Hope you have a great time, sir. We'll see you soon.
Thank you, Sakshi. All the best to you. Thank you so much.
Thank you. We'll continue our conversation with Kiran, viewers. First, about 14 minutes out in trade. What would you say, Kiran? Anything that catches your attention where we should focus on now for the day?
Yes, you can focus on the metal side, and in metal side, particularly Hindustan Zinc, you can keep an eye. The stock price facing a 200 days moving average resistance, but overall it has given a breakout from a triple bottom pattern and one horizontal line at 660, and it is as of now trading at 464 or 465. So current market price one can go long on Hindustan Zinc. Keep a strict stop loss below 450, and you can expect price target within 2-3 days 500 plus. So Hindustan Zincs look very much promising. One more stock which we are liking, and I wish you can also. I believe that you also have a view on that particular stock. That is a PVR. If you look at PVR from 1800 to 870, 880 level, from that stock price started consolidating and created triple bottom pattern, and it has given a breakout above 1040 level. Now, generally, we have seen the trend in the Bollywood since last couple of years that big budget movie or the super heroes or maybe actors are releasing their best movie on the festival season like Eid or maybe Diwali or maybe Christmas and all kind of things. And recently, and this pattern has been seen since many years. You can see last year also, June month PVR started giving a rally. So similar pattern we are seeing technically also, factor also, and seasonality also. So three parameters are now meeting on PVR. So one can go long at PVR. And definitely in this festival season, you all people are making plan to go to watch the movie. So whenever you go watch the movie, buy one share of PVR. That kind of a
Right.
theme you. Yeah.
It's a good
And
strategy.
yeah, so but PVR looks very good at current market price. Keep a stop loss of 1,000 and you can expect price target of 1,200, 1,300 for sure.
Okay, fair point. So that's the view that's coming in. Let's actually look at some stock spotting and keep looking at how the markets are taking shape at this point. It's a green screen, although the gains may not be very spectacular, but at least it is in the positive zone. For the Nifty, we are at 24,560 after the first 15 minutes of the candle is formed. We have green as far as the Nifty Bank is concerned, 55,650. Broader markets also in the positive zone. Broader markets within mid caps, small caps, Nifty 500 stocks all up in about 2 tenths, 1/10% higher. India Wix is down by 3.5%. We're also given to understand in terms of the key sectors. FMCG is positive, IT slight gains, media about 0.7% up, metals flat with a positive bias, PSU banks about half odd percent higher, real estate half odd percent up, continuing from yesterday's move. Private banks, although just flat with a positive bias, oil and gas improving from yesterday's losses about 0.3% up in trade, but autos and financial services are just flat with a negative bias at this point in time. Let's discuss some sectoral action. Real estate is something that Kiran I wanted to discuss with you. Yesterday also we saw sharp momentum here despite the overall weakness in the markets. Again, as we were discussing with Gaurang also, on the expectation of the RBI policy rate cut on Friday, and that seems to be keeping the stocks in focus. What's your sense?
See, when we are discussing about the RBI, generally two sectors are very sensitive considering the rate, interest rate. One is the real estate and another is the auto. Now, everyone is expecting that RBI should cut the rate, and most of people are expecting. But at our sense or our research, we are not expecting RBI to cut the rate, and that is similarly we can see yesterday. The market has also reacted after giving us such a big breakout. The Bank Nifty is not performing just because of the people. Well, there are also corner where people are not expecting anything. Surprise can come from the RBI in terms of lifting down the rate or lifting up the rate. So we are seeing that policy is going to be a muted non-event policy. After the policy, we can see certain rise in Nifty and Bank Nifty and collective sectorial move also. So during this volatility, definitely one can go long. Reality sector or metal sector has given a breakout. No doubt, metal sector has a headwinds of the tariff. But if you look at the reality sector, once that RBI policy headwinds went out, we can expect some fair good amount of rally should come. So overall reality, I again reiterate my view on overall reality. I don't know whether you remember or not, but this is the third time we are discussing overall reality. We are
Correct.
initially discussed at 1650 level, 15-20 days back, and after that the stock price is 1800 as of now. Stock price facing is 200 days moving average resistance. So any dips towards 1750, 1740, you can go long on overall reality. We can expect 2000 plus target for sure. DLF already run out, so we are not giving any suggestion on DLF at current market price. But overall, yes, definitely one can go.
Okay, fair point. Overall, realty consistent focus from Kiran. We have been discussing this, and if you had got at the better side of the prices that Kiran recommended, you would be celebrating the gains. And the outlook has also been shared. So continue to keep an eye out on the entire real estate space here. We will also look at some of the other pockets. IT is something that I wanted to discuss. What's the fresh view here? It seemed to have lost some steam that it had garnered at the beginning of last month, or maybe starting April onwards, towards the end. When the earnings kick started. Beyond that, IT stocks continued to soar higher, provided the support to the indices as well in terms of higher highs. What exactly would you look at IT right now? Why do you think there is continued lack of any momentum?
Yes, definitely. So FMCG and IT both are our preferred sector as of now. We are asking our client to keep in your portfolio. The second half of this year, which has just started, we expect some good news or some good fair amount of return should be generated by the FMCG and the IT. Within the FMCG, we can see some of the stock has been started performing well, but in IT, still the performance is not coming. Some of the mid cap stocks are rising, but large cap stocks are not performing. But in large cap stock, Infosys and Wipro are our preferred picks at current market price. So any dip, you can go long in mid cap IT. Info is our preferred pick. So I just wanted to reiterate our view on Info Edge. If you look at the current market price, stock price is trading near its 50 days moving average, continuously trading into the falling channel. But overall, the momentum indicator is showing some sign of reversal soon to be happen on Info Edge. If 1400 is impacted, then we can expect some good amount of rally should come on Info Edge towards 1500 for sure. So Info Edge, Infosys, and Wipro, these three stock are our preferred lineup into the IT.
Okay, no matter what, you will always get drawn to the sharp momentum in stocks. Buying in defense stocks continues. Look at Garden Reach Shipbuilders, 34.40, 9% higher in trade. Of course, no surprises there. These are fresh levels that we are looking at the highs for the stock. Cochin up 5.5% at 21.40. Mazagon up 3% at 35.37. Bharat Dynamics up 3.7%. MTAR Tech 2% higher. Mishra Dhatu Nigam, you can see 3.3% up in trade. BEML up 3.7%. BEL also up. Hindustan Aeronautics up by 1%. The entire space seems to be abuzz with all the action at the current levels. Days high for a lot of them. Fresh highs, 52-week highs, and the momentum continues across the board as well. Anything that you'd like to add to the list of names that you suggested earlier, Kiran, on defense?
See, honestly speaking, again on defense, which stocks we are liking that are already running very, very far and the momentum indicator are into the overbought zone. So we don't want to chase this particular rally. Whoever holding this particular stock, they can hold. On the contrary, I don't think so. Okay, one should chase this particular defense sector, but there are time the corrections will happen. At that particular time, you should buy. So generally, as a human, our tendency to buy when there is a sale or there is a price crash. And here we are going to chase the stock which are already running at all-time high. So we don't prefer that strategy. Definitely for the trading perspective, that is okay. You should follow the breakouts. But if you want to do investment, it is better that wait. Prices will come down, and that particular time you can go long. Yeah, in the
Are you,
morning we
are
highlight.
you suggesting any viewers, clients of yours to also book profits for those who got an early entry during the consolidation? Is for those who were having short to medium term, is it the right time to book out profits?
No, we are also not asking them to book out the profit because you look at the BDL and CRST price chart as I gave a view that earlier whatever the stock made is all-time high and from that particular price we have seen a steep correction. After that steep correction, the stock price showing a strength and it is coming up. But GRST and BDL and BEL, these three stocks only which has crossed its previous high, so it's an inherent strength. So it is not advised to book the profit. You can keep a strict stop loss of previous all-time high and ride this rally for sure.
Okay, right. This rally for sure. That's the view that's coming in clearly. Let's also look at some of the other spaces. Kiran, I wanted to draw your attention to the renewable energy space. Of late, we've again seen a lot of momentum on Suzlon, Inox, SW Solar, the likes within the entire green energy, clean energy kind of a space. What exactly is your view here? Are you looking at any stocks or do you think this was only momentary?
See, this stock price or this particular sector is definitely a momentary, but there are few stocks which we are liking. You can consider as a KP Energy or maybe Vari Energy, which are the solar panel is making. Then Borosil is also a very good stock where you can keep the eye. So Borosil Renewables is at our preferred pick at current market price, considering it has a long history of fundamental and technical both where Vari and KP Energy is just recently listed. So Borosil at current market price is 440. You can see some consolidation has happened during 450 to 460 level. Now from that level, it is trading at its lower band where all the moving average is also very good support. So one can go long on Borosil Renewables at current market price or any dip towards 540, sorry, 530, 520. Keep a stick stop loss below 520. We can expect price target of 600 for sure. So Borosil Renewables look good at current market.
Okay, we'll keep an eye out on that as well as far as the move on Borosil Renewables is concerned. Coming back to the markets and the key, sectors that we can probably look at this point. Within the broader markets, let's spot some stocks, mid caps and small caps. That's where some action can be actually seen in today's trading session. Remember, the quantum is less; it's not very huge uptick at this point in time. Small caps, again, we will avoid talking about defense because we've already focused on a whole host of them already. You have Aster DM Healthcare that's up and about in trade, 3% up, IKS. You also have names like Reliance Power within the, again, renewable energy space that we've discussed, K FinTech, Data Patterns, Reddington, CESC from the power space, India Mart Intermesh, that's up and about. Railtel is also up in trade. In fact, let me also just get a quick view from Kiran also on the railway related stocks. Are you getting any confidence in the railway story, or do you think it's cannot be compared with the kind of momentum that we are seeing in defense? Because in the erstwhile rally, it used to be both defense and railways that used to move in together, but now it seems like its defense has really overtaken in terms of the key focus, stock price momentum. But railways still haven't got their mojo back.
See, ratio and PSU, if you consider, except they both are PSU sector, nothing is comparable, honestly speaking, because both are doing very much differently work in their own core or own strength. Now, coming, they are not getting back their mojo, or they are not becoming a favorite again as it was previously. We are very much surprised with the IRCTC performance. The price is not performing. The reason being, if you look at, we just passed on the vacation where the Indigo does very well. It is trading at all-time high. And if you look at the Indigo, if you look at the IRCTC trading, it's 52-week low, which is surprising, from 1100 to 680 again back. But at current market price, definitely the stock price has created a rounding bottom pattern. Stock price is trading about its 150 days moving average. That is also very good support from the market. So one can go long on IRCTC at current market price and dips towards 750. Keep a strict stop loss below 750, and we are expecting some fire moves on IRCTC very soon. One more stock which we are liking from the railway sector, there is a RITS Limited. If you look at the RITS, after the making a 400, 500 kind of a level, stock price has a steep correction to the 200 level. From 200 level now it is again formed a double bottom pattern, given a breakout, trading about 200 is moving average. Very good setup. One can go long at current market price. Keep a strict stop loss below 250. And again, we can expect price target of 350, 370 very soon. So within the railway, IRCTC and RITS catching our eyes, and we are very surprising why IRCTC is not running. We think it is a very underperformed stock. Once in a while, it will run.
Okay, fair point. Taking the next question with you, and this is on the pharma space that I wanted to discuss as well. Is anything looking interesting here? We have some, few stocks, very select pockets that are up and about today. AstraZeneca has hit a 52-week high. Aster DM Healthcare is up. We have been seeing off late how the diagnostic chains have been moving up as well. What piques your attention?
Within the pharma, first I wanted to discuss the Nifty Pharma. Nifty Pharma indices is trading
Yes.
in very falling channel, a steep channel. The indices has a very good support of 20 and 100 is moving average, but the chart pattern is not encouraging. Definitely, we can see some more time to be given to this particular sector. But within this, after saying this, we can see some stock specific rally for sure. You can see DVS Laboratory, it's all time high. It has given a fantastic breakout and it is run away. Now the similar pattern we can see on Dr. Reddy at current market price. Stock price has a resistance of its 200 days moving average, that is sure, but it has a resistance of 1250, which is been crossed and now trading very fairly with the volume. So Dr. Reddy is on our radar at current market price. One can go long. Keep a strict stop loss below 1200. You can expect price target of 1400 for sure. So Dr. Reddy within the pharma looks very much promising. One can go long on Dr. Reddy for sure.
Okay, fair point. I hope this has also helped all our viewers out. Let's discuss one more space, which we have also discussed in the last 1 week as well, Kiran, with you. Eternal, Swiggy, Delivery, Nika, Paytm, all of these new age digital space stocks that we should be discussing. Eternal, do you think all the negatives are now priced in? The stock is now poised to move up, and all the walls of worries are now a thing of the past? And how would you look at the entire space?
As discussed, you rightly said last week also we discussed Eternal when there was some negative news, and we have highlighted our view that stock
Yeah.
price has good setup. And if it is not going below 220, 250 level, then we can expect again a fair rise towards 245, 250 level. We can see within the week it has been raised and touched the 240, 45 level. And from that level, it is again trading at 240, 238. See, stock price is consolidating since a very tight range of 220 to 245. And looking at the volume profile, looking at other technical chart, other technical setup, we can expect some fire moves on eternal for sure. So one can go long on eternal at current market price. As of now, the percentage stop loss is little bit big. You can keep a strict stop loss below 220 and expect once the price crosses 250 level, fire moves towards the 300 for sure. There is a one more stock from similar sector, that is Swiggy. Earlier, Swiggy has given a breakout from double bottom pattern somewhere around 380. However, that pattern failed and it went down to the 320, 310 level. And from that level, again, it started rising into the rising channel number one. The volume is doing very well, and from 380 to 320 there was no volume in this particular correction. So we can see the volume dried out when the price is corrective. Now when prices is going up, the volume is happening, which is again a very good technical setup, a traditional technical setup. So a little bit risky call, but one can go long on Swiggy with the strict stop loss of 320, and we can expect price target of 380 initially. Once the 380 cross, then you can see some good amount of rally should come on Swiggy also.
Okay, fair point. We'll keep that in mind as well. Kiran, on that note, we'll thank you then for being with us on the show today and helping us navigate through the markets. Although first half an hour of the candle is now out, and seems like we have slipped lower from today's high point, flattened out 24,552 odd levels that can be seen on the Nifty right now. Similarly, for the Nifty Bank, the broader markets, some kind of a momentum that we built up in the first 15 minutes of trade seems to be now flattening out. On the Nifty Bank, you have 2/10% of a loss at 55,483 at this point in time. Let me also quickly help you understand the index contributors of the trade today. Only key stocks that are supporting the markets on the upside are Bharti Airtel, M&M, Tata Motors, Reliance Industries, Shriram Finance, Infosys, and Bajaj Finance. On the lower end, ICICI Bank. This is the second day in a row when ICICI Bank is contributing sharply lower. TCS, Titan, Ultratech Cement, Trent, Axis Bank, and SBI. Mixed trade. It's not a sectoral move, but specific stocks that are contributing on the either side as far as the Nifty is concerned. We'll keep a watch on how the markets continue to take shape, the key factors that are supporting or probably hindering the market move at this point in time. To track the market momentum, stay with us on Business Today Television throughout the course of this session today. I'll be back at 12 noon to answer all your daily calls related questions on your stocks portfolio. Top market experts will be joining me, so stay tuned for that as well.